should start the Imperial March for our conversation leading into oil and the XLE, since that's where our conversation started 10 minutes ago from. So let's just pick it up from there, girls. Let's talk about oil, and let's talk about the major distribution that is getting ready to fuck the entire sector. Please, Nick, square it up for us, and then GP can go on an 8-minute rant.
Well, the question I had, or not question, the comment I was kind of about to make was that, in a couple of past shows, we were talking about people calling Head and Shoulders tops and bottoms, but it'd be like calling a Head and Shoulders pattern like in the midst of like a range versus like after like a significant move higher or like a significant move lower on, like, let's say an inverse Head and Shoulders. And if you pull up the weekly of, like, let's say the EOG, I'm like, dude, that is a super pretty like Head and Shoulders pattern on a weekly time frame, and after a pretty sustained move high. So I guess that was kind of where I was going with that. GP was just like, and it was more of a statement, I guess, than a question. But I don't know. What are your thoughts?
My thoughts have been for a really long time that we are in distribution mode, right? And it's one of the most frustrating parts of being either long or being short, because the shorts never work and the longs sort of work and then meet you in the face with a slap, right? Like if you recall Amazon, right, in one of the highest growth periods for a company of its size of 2020 and 2021, we went sideways, right? Peak earnings growth in all the right situations. And you had oil in a similar process, right? It moved 400 to 500% off the bottoms, and it peaked on a war. And since that, it has literally been just distributing sideways, up, down, frustrating both longs and shorts on both ends, unless you're well timed, right? And oil is a hard commodity to trade in general. So, and then you're starting to see, like, okay, I understand a lot of oil companies will be break even at 60 oil plus, right? They're in a good position and their balance sheets are healthier and stuff like that. But what if
we're right there?
Yeah, we're right there. And what if that now 60 is looking at 50 in the next couple of months, right? What does it look like then? As we always talk about, the markets are forward looking, right? So if it's forward looking, what's your growth trajectory? Are you just trying to survive, or what are you actually going to have growth moving forward? And I don't see it, right? And some of these, I think Exxon was trading at like a 9 or 10 multiple, which it hasn't done in decades, on the fact that there was growth in a company that's been stagnant for well over like 30 years. And it's trying to read the tea leaves. And to me, it was the combination of a couple of things, but the biggest one I would say is you had every tech company guiding lowering estimates, saying we're done, blah, blah, blah. That was October and somewhat January of this year too. And telling you, and then the other side is Chevron announcing the largest buyback ever known to any physical person on this planet ever. And then they had to walk back the comments because they're like, oh, we don't mean in the next year. We mean over the next 10 years, right? Mm-hmm. Because one side you had inflation going bananas and the other side is like, oh, we have record profits. So I saw peak earnings growth in energy and peak earnings disaster in tech. And
there's your chart. I just stood up on the screen to save everybody some minutes here. It's negative divergence and it's in distribution.
Yep. And so that's where I still stand. And to me, we have not even started the big cycle down. And
I mean, pick a fucking chart, right? Like,
yeah,
pick a chart. This one's kind of
The
flattish, but
DVX looks a lot like the EOG in terms of like that head and shoulders. I mean, a break here would send it
DVX.
basically back down to the breakout
Pioneer.
that like
I think he said
What's that?
CVX.
CVX, yeah.
DVX.
Right. And you have the thing about this head and shoulders is see where the volume peaks, right? It's not on the right shoulder, it's on the left shoulder. And
Yeah,
so like from a technical perspective, when you have head and shoulders patterns, especially on the larger time frames, the peak in volume is always on the left shoulder or the head. Right. So
yeah.
that's something to kind of pay attention to as well in terms of distribution cycles. MRO looks awful. I think MRO actually looks the worst actually out of all the energy names.
Marathon.
Oh yeah. Oof.
Right. To me, this is just
Poop-tastic.
yeah, to me, this is just looking terrible. And if you can pull up the 8 different components, and remember, if you're talking about Exxon in this, Exxon will probably survive better than the other ones, as it's provided better value on the way up as well than the other ones, and they maintain their dividend throughout. So, AKA, who's the best of breed in tech? Look at what Apple did until January of this year, right? It maintained its levels for quite some time before the bottom finally just fell out of Apple because they're like, you know what, we're just going to sell everything.
The geniuses can't have it both ways. They see this in a tech chart, but they won't see it in an energy chart or an oil chart. I mean, at the end of the day, like, it is what it is. Like, quote unquote, the generals are the last to fall. Well, it's going to happen here too.
At least what I think.
Yeah.
It's going to happen here too.
But you're probably tired of me saying it over and over again.
No, GP, I thought you put it before we hit the play button or record button, and I was like, why are we talking about this for 10 minutes without being live? You were saying something really interesting about how many EVs are out there compared to 2008. I think that's a great point.
Yeah, I think that's what Nick was. We were talking about oil, and I was like, oil had all the perfect kind of recipe to take out 2008 highs. And what did it do? It failed miserably before 2008 highs, right? You had a war happening, you had inflation happening, you had supply, demand going through the roof, right? So to speak. And oil peaked at what, 147 or something like that? I don't remember the exact number. And that was what, $60 lower than $40 lower than what it was in 2008. And so to me, this is a chart that's representing lower highs on a bigger time frame. And what's the big thing that's changed in this lower high situation? Is oil going away and it's going to die forever? No, not yet. But the cycles are showing you that the demand for oil is waning. And what's causing that right now? The big push in EV. Just if you're taking Tesla alone, I think they sold 1.4 million cars globally last year, and they're on track to do 1.8 this year. Globally, that's 3-4 million cars in just the 2 years that are coming off from ICE and moving over to EV.
So why did OPEC cut?
And OPEC usually, and I was looking back at history because when it happened, I saw a big reversal coming. Did not expect it through via OPEC cut, but it happened. But so that prompted me to look back at history, and most OPEC cuts have happened. Guess when? When demand was waning. Not some manipulation cycle, not some craziness, but when demand was waning. And they cut preemptively because they saw demand waning. Maybe the China reopening is not going well. Maybe this is not, whatever the reason you want to throw out there, they saw enough reason to say, and this is not I'm going to screw the U.S. because they hate money, right? Like, sorry, that's not how this works personally. So maybe a here and there, but a global coordinated OPEC production cut amongst all the providers is an indication of crap. We might not have the oil demand that we need to keep the production up. And what did it do? Oil blasted off, rounded up, and then straight back down.
Nick, you were about to say something.
No, I just thought that, I mean, even the automakers came out in the last couple of years and have said by mid 2030s they were going to be fully electric, right?
Something like that, yeah.
Yeah,
So
but oil,
I mean,
I think automakers make up a small percentage of actual oil use, right? Like if we
Sure.
actually looking, I'm just saying it's a general adoption, right? And that's
Yeah.
waning demand.
So I think one thing that many people who are in the market, especially on the retail side, struggle with, but we all do, recency bias, right? We all want to be part of what's working. And for a long time, energy and oil has worked. And we set a price target and we're like, ooh, I would love it if my so-and-so or whatever came to this price. And that means, buy the dip, back it up. I want to, load up right here. And I think that was a large fallacy that many of us fell into early 2022. And I think this is the same pattern. We're seeing it repeat itself now in 2023 with oil, because oil was working just like in 2021. Tech and high valuation was working. And it's like, okay, when my price target finally gets there, I need to buy. And that may not be that may not be the right time to do it, because again, we've got ingrained recency bias of trying to be on the train that's going in the right direction, when really you're picking the train that's going in the wrong direction.
Yeah.
Okay, I'm done. That's it. Good show. Thanks guys for joining us tonight. Just joking.
No, but so let's expand on that a bit further, Bags. When you talk about recency bias and you're talking in years here, the question is, how do you address that, right? And to me, what I realized a long time ago is when the technicals are not confirming your recency bias, right? Like that to me is what changed for me. And that's not something I had incorporated into my viewing when I first started this, but that's why I focus more on the technicals. And so I think the goal is to get out of our own ways in this conversation, right? When it comes to investing and recency bias, and most people want to know how.
Well, but often though, GP, I think we're trying to find things to validate our bias, right? As opposed to say, oh, maybe I need to rethink this and look at it and be objective, and then like, okay, I could be wrong, right? You're trying to find validation of your bias, not you, right? But one is trying to find validation of their bias, and that's where I find, I mean, I'm guilty of that. I think we all have been guilty of that in the past, present, and probably in the future. So that's what I'm just saying. I think that as a whole, kind of got to get over ourselves and have an open mind. And when we've seen things play out in a certain way, everything's not going to go to the moon indefinitely, right? Everything has a pullback. There are no parabolas that just keep on paraboling. Is that a word even? Paraboling?
I don't. I'll go with it.
It is now.
But you know what I'm saying, right? Like everyone wants to make the easy money, ride the hot hand, and you will find a reason to say, well, this is still going to work, when technicals be damned, could be telling you otherwise, but you find a reason, whether, okay, it's a double bottom, or okay, RSI is down at a 3, right? Like RSI can stay down pretty low, right? Like whatever it is. So I think we just try to find reasons to validate our own bias, as opposed to being open-minded and trying to figure out the potential flaws in what one's thesis is.
And so Nick, actually, I'd rather hear a little bit more about what you think about recency bias and how you can potentially address that, or how you try to combat that.
I think that in terms of recency bias, I would kind of agree with Bags. I think that 2020 is still in the back of a lot of people's minds in terms of like, I don't know, shit doesn't go just straight up. Like the markets are going to fluctuate, and to have that type of market, like those come once a decade, once every 20 years, so like it's a matter of finding, like we can be like I can be bearish on let's say the XLE here, and I can pull up a monthly chart and say a 50% retracement from its move off the lows is about at 60. And I would argue that a 50% retracement in any trend is healthy. So like, I don't know. I don't know. I guess I don't know necessarily where I was going with that, but either way, I'm just saying that I think 2020 is in the back of a lot of people's minds, and that if the market doesn't go straight up, that means we're going to roll over and go to zero. We're going to roll over and we're going to continue, whatever.
He said we're going.
I think zero. That no, I don't. I don't. I think that like we have to trade the market that we get, not the one that we want.
Right.
And whether you're an investor or a trader, I think that it's if 2021 to 2022 taught me anything, it's sell some, hold some, hold some. And just kind of let the markets prove themselves right if you're going to be legging into a position versus legging out. It's been more of kind of a hit and run, obviously, over the last year or two, but
and that's
I think
time
people
frame, right? So
yeah,
totally,
1000%.
Totally.
And that's time frame to me is like, should you have been buying shop when it was at 1700? No, you're an idiot, right? So let's just be honest, right? If you're buying it for trade, no, but if you're buying investment, yeah, you have no idea what you're doing and you should probably go read a book. And I'm not trying to be mean, but that's retail for the most part, right? So it's going up, so I'm going to buy, and there's no doubt, but it also had just done like 1,000% in a year, right? So most likely it's going to pull back. The question is how long the pullback is, and the technicals I've found lead the fundamentals, and it started pulling back, and then a quarter later they announced negative EPS, right? And so why did shop behave as it did this week on earnings? Is, you know what they did? This is what you want to identify as companies, to me, is they read the room, right? When you play a basketball game, when you play football, you read the defense, you read the offense. So what did Shopify do? They went back to profitability. They got back to their fundamentals. They're showing profitability, and that their management is 100% concerned about what they're bringing out there. And so what did they put in a 40% week this week, I think, right? Monster move off earnings. It was more than the implied, but because
a 28% week.
28% week. Okay. People were not expecting it because a lot of companies haven't. Look at Roku. They're still operating negative, right? They're still unprofitable. And I'm like, we are in a monetary shift. Your 40-year, 30-year monetary shift. It's no longer free money. If you are not going to return to profitability or get to profitability in the next 6 months, you are going to play on the side of underperformance.
Yeah.
And so like I said this, I think 6 months or 12 months ago, the best thing Amazon could do for itself is introduce a dividend, because it creates a whole new Even look, NVIDIA has a 1 cent a quarter dividend or some stupid nonsense, right? But what does that do? It opens up an investor base that's more willing to take the chance on a company potentially hitting it out of the ballpark and then generate some cash in the meantime, right? So Amazon is not doing that, right? And they're barely trying to return to profitability. And if they did those things, Amazon would be in the same place where Apple, Microsoft, NVIDIA are, because these companies' management is phenomenal. and they've stepped up and said, yeah, we know what this environment needs. And so
Yeah.
that's what you have to be looking for
Nick,
here.
are we on a 3-week tight on Amazon?
Oh,
Would you
yeah.
consider that a 3-week tight? Yeah.
Yeah, buddy.
Did it want 1.5% move?
I'm just
Yeah.
checking.
Just, I mean, it's like right there. I think it's, I mean, in terms of Amazon, I think it's got a problem with 106. I think once it gets through that 106, I think it's gone. I think it's gonna rip.
No, that's a 3-week tight. It's the same 3-week tight off the COVID lows in the beginning of the year.
It's working
It's
on a
actually
monthly
almost the
tight,
same
too.
pattern. Huh?
Uh,
I loved it. I
2%.
love that move. They literally made everyone. I thought it was one of the most brilliant moves. Just sell that crap. Everyone was so disappointed. You couldn't ask for a more perfect setup to just rip higher.
Yeah.
I've liked Amazon for a few weeks now, so I'm not surprised. Yeah, I'm happy with the performance. I think it's still got some up to go.
Yeah, I personally think it trades to the 130s before you can flinch, right? That's my personal opinion. Because they
That'd be
still
okay
beat,
too.
right? Huh?
I mean, I think it's heading. Yeah, I agree. I think it's heading mid 130s, 140s.
I'm okay with that.
It still needs to take out that 115 level that it sold off on. So that's the other thing. If you notice the last two earnings, that the sell-offs were actually less than the volume from the day before earnings.
Interesting.
Do you have the chart up?
Yeah.
Yeah. So the volume of that kind of island gap and island gap down, volume lower. Same thing this time, right?
Yep.
So there's just some subtle clues. So when they sold off this time and they couldn't get the volume to go, it's just like,
GP's just a volume boy.
They
hey man,
held that
I've been,
101 too.
yeah, that 101.18 is the COVID, the big base. So it was all kind of perfect in my opinion. The 20-day, 20-week, 50-day, whatever you want to call in this moment is was just great. But dude, I've been sharing these thoughts on this stuff for a while regarding volume and stuff. So hopefully you guys are, not you two, but the people who are listening are picking up on the subtle clues, right? This is all stuff
we
that
know you're not chastising us.
yeah, this is just picking up on stuff that I've learned over the years. Take it for whatever it's worth, right? Let my learnings help you grow faster and better.
I guess no one liked our tweet. We didn't have a lot of people show up after I talked shit about some energy names and some oil.
That's because everyone now starts to believe. Now is probably the time to get long energy.
Block. Report him. Couple other names that had some pretty nice moves this week. I mean, Coinbase had a big move on Friday after earnings.
Oh yeah.
Drunken Kings, big move.
Yeah.
I don't keep up with open door, so that is a big move though.
There's a request to talk about
Zillow
Microsoft.
Had monster bars also.
So Microsoft?
Yeah.
Who's requesting to talk about Microsoft?
Darlene, is it? Yeah. Darlene Ian Wright. Darren Ian Wright or something, yeah.
Why am I not seeing all the chat?
Because I think he just replied to me on the retweet. So.
Oh, got it. Yeah, we can talk about Microsoft.
Did you see Redfin and Zillow on Thursday, Friday? Monsters.
Yeah. But that Redfin's been showing its cards for a while now, right? So,
yeah, totally.
Microsoft is just giving those big old green bar ragers.
Yeah, and
I think
this guy's almost back up to all-time highs. Like this is.
You get that daily view? That was beautiful. 4 days of solid
off all-time high.
Solid consolidation, and then boom, right? Yep. Let the moving average catch up, and boom. That's technically just beautiful.
It's been doing it all year.
Yeah. but it gets to the level we're at right now, and it's probably either it's going to run forever and by forever the next few weeks, or it's going to grind higher, right? So,
Yeah.
this is not where I'd be looking to find trades. If you own it, that's a different conversation, but the trades will start getting choppier here, in my opinion,
Yeah.
or
I agree.
nonstop.
I agree. It's going higher. It's going to take some time though. It's gotta, all parabolas have to stop parabolating.
Yes, the word.
Nick, what did you trade this week?
Don't laugh at me. Gold and the miners.
The good old GLD.
I was largely, I mean, I was getting into some short positions in energy. I was short EOG and DVN, and then I was long the miners, FNV, RGLD, and a little bit of the GLD, which I still have. I took a bit of a beating on Friday. Somehow FNV fucking pulled out, dude, and I only got stopped out of just a tiny bit of RGLD. It basically tagged one of my trail stops by like a couple pennies, but whatever.
RGLD?
RGLD, yeah.
Royal Gold.
I think
did you get invited to the King's coronation for trading Royal Gold?
No, I didn't get an invitation. No, bummer.
You should have been invited for that, I guess.
No, I was gonna bring up GLD and even like the SLV. I think silver, I think copper, and I think gold, all three look great. I know we've talked about gold in the past and basically waiting until it makes all-time highs. I think we're getting there, but
we are getting there. First, we're going to tag 160, and then we will get there.
You think we'll hit 160 on the GLD?
I think so.
We're getting there. We're just not there yet. I did a lot of driving the past 2 days with the kids, and I don't know how many times I heard, "Are we there? Are we there? Are we there? Are we there? Are we there?" It seems like the gold trade is. Have we reached that high yet? Are we there? Are we there? Nope. Still waiting. Nope. 10 more minutes, kids. Nope. We're not there yet.
I don't like last month's candle. My tune may switch with UGP if we can't get like a decent close this month. I think this month should be pretty telling based on last month's candle.
Red.
You think this month will be red?
I think so.
On the GLD?
Yes.
This month.
Take a look at the monthly candle. The monthly candle is
all right,
sort of an inverted hammer, right?
It's only up 1.4%, so there's plenty of time in the month. Could happen.
I think it breaks last month lows, and we probably break below 180. Personally, that's me.
What would you be playing it to the short side, or you're just stepping aside?
I refuse to trade gold anymore.
Yeah.
This is the conversation, right? So, but if you're asking my opinion on the chart, I think gold is going lower. That's my opinion. This is the third attempt at taking out the second attempt at taking out the 2020 highs, and it made a lower low in 2022, and now is making a lower low here on what looked like a really bullish momentum for 4 days, and then took a big fat nasty dirty dump on Friday, right? And
it got bought though. It got bought right where I felt like it needed to. I'm in particular the FNV and the RGLD. I like both of those monthly charts. But yeah, if they don't push into highs, I'd be wary and quick to hit the run button.
Yeah.
I think my focus is largely going to be on selling any type of strength in the energy names. Is kind of like, I think that and general equities, I'm kind of just looking to accumulate. I'm not really interested in selling anything. My tune would obviously change in the energy sector if we were to like reclaim the 200-day. That's kind of like my line in the sand where I'm like, okay, I'm wrong. But I don't know. As far as gold goes, I don't. I think I don't know if I agree with you on the 160 call yet. If it does roll over, looking at the weekly chart, the 317 bar is of interest to me. It's one of the biggest volume bars as of late. So if it rolls over and dips below, let's just say 184.84, I think then the next stop is basically the low of that bar, which would be 177-ish. And I'd just take it a step at a time for me personally.
Yeah, and I hear you. And I think the way I look at that, right, is look at the volume it took to get to that high, and then every kind of push higher has been on lower volume, right? So to me, you're running out of buyers. I think that's just generally the fact, right? Like, take a look at the bar from 3/8/2022. The volume it needed to go try to break out all-time highs, couldn't get there. That was a lot of volume. This time tried to break out towards that same level, a lot of volume, but nowhere close to what it was a year ago, right? So
yeah,
general momentum here to me is waning as it continues to make lower highs. So to me, these commodity trades are just painful, right?
They are. I don't even know why.
I don't want any part.
For sure.
Oil, gold, I don't give two damns. I think this is the easiest way to go bald and gain 300 pounds. Like, I just don't. It's just not worth the headache. Maybe you'll hit it out of the park or whatever it is, but there's plenty of pain in regular equities that I don't need to extend it to commodities.
For sure. Back to equities. I think I don't know if you want to go into like drug, medical type shit, but
drugs, XBI, finally.
Well, no, I was going to talk about like medical supply stuff,
fuck,
like
yeah.
like INSP. What's the ISRG, STAA? Like some of the. I mean, I think there's a lot of stuff that still is looking really freaking good in that space. I don't know if there's anything that you're looking at or watching.
I like ISRG, but it's not a trader, right? Unless you're doing commons.
It's an investor, yeah, for sure.
So that chart looks better than STA does.
Yeah.
To me.
Agreed.
I think this is that sell-off on IWM regional banks in biotech was one of the best traps in the world. It's just and we're so far we're what, $10 higher from that moment?
Yep.
Yeah, no doubt.
I know Bags for a moment there was like, screw you guys and your Labu crap.
Fuck, man. We all trade the things that we either have let me start over. What we have going for us are the things we know, right? And that's an inherent advantage to us, is trade the things you know. And I have sucked at commodities. I have sucked at anything in the energy sector. I have sucked in the drug sector. Just flat out sucked. They're hard for me to trade. They're hard for me to understand. And I bought the Labu on the XBI. The biotech's getting flushed a little bit. So I'm up quite nicely right now on probably a larger stake than I'd like to admit. But at the same time, it's painful. It's painful when you don't know anything about the sector or little about the sector, and you're only trading off the technicals. And biotech in general has been painful for, I don't know, the better part of a year and a half.
Yeah.
So it's just hard. And it's hard for me to stay in a trade when I don't have any warm and fuzzies about what I'm trading. So
yeah, there's definitely a different level of conviction when you know what yeah, I'm with you.
Yeah, no doubt about it.
So
But,
I stick to my fuck around 5 a lot on my trading, and then I like to go long on my whatever techs I like. And that's just that's my bailiwick, as they say, and that's where I go to. But I'm very happy that XBI is doing its damnedest to break out right now.
Yep.
Yeah.
So that's my spiel on drugs.
Yeah, I think there's like, if you pull up the MDB chart, this one on a weekly
Which one, GP?
MDB Mongo database,
Oh yeah.
this one looks like it's going to explode, right?
Yeah.
Like it's just they keep trying to sell it down, and this is the thing with low float stocks. They trade like 1 million shares a day. It's not a lot. So, but what do you see on that chart? You see wicks galore,
Yep.
right? There's a couple of sell wicks, but there's mostly I'm
Push
gonna
off
sell, yeah,
wicks.
push off the bottom wicks.
Yeah.
So, and it's just sitting there teetering at the edge of let me go, let me go.
Well, I mean, look at this guy. This guy had a week right here.
Yeah.
Data Dog 13% up on a week. And those wicks were telling you something right there, right? Like, we're not letting it go below this. We're not letting it go below this. So I like the positioning. I spotted this a few weeks ago and didn't enter. But yeah, it looks like a pretty solid one too.
So I have the question for you guys. I ask this question quite often when people disagree with my stance, because I think it's pretty telling, is like, what is your plan if stocks never make that lower low that you were expecting all of 2022 and into most of 2023 after this bounce? What if that never happens? Now you're all cash. Are you just going to stay cash? What if this cycle starts to break out to the upside and now continues for the next 5 years? Are you completely out of the market? Has the market priced out a big generation of people again? Is that what's happening here? And
I think so.
It's
so,
miserable bear thesis, right?
Absolutely.
Like, it's miserable bear thesis.
what gets you back in? And if you're not going to get the valuation, you think it's too overvalued. So you don't get the valuations. And valuations are just people buying and selling, by the way, right?
Yep.
Like, let's be real, right? So yes, a company that makes $1 million a year valued at $10 billion is quite overvalued and most likely will fail at some point, but that irrationality can last for a while. Nicola, right?
I think one of two things happens. Either you completely stay out, or the pain of it, watching it go up, you finally get FOMO near the top.
Yeah, and I think that's what's going to happen here. A lot of people think there's a blow off top coming, and I don't think that's necessarily the case here. I think what's going to happen is a lot of people are just going to not participate, right? The chase that happened in 2000 was a big part of people missing out 100% daily gainers, right? So people are like,
Yeah.
oh, screw it. I'm like, this is like not 5-10%, right? Like, you're not having 100% moves here. You didn't even have 100% moves in 2020 off of infinity money, right? You didn't have the euphoria of 2000. So I think I think the market's just pricing out this new level of investors who think everything's overvalued, and they may be right fundamentally. I'm not arguing that point, but I guess is what happens if Apple, which was supposed to die because all the insiders were selling, What happens if Apple just slowly grinds from 170 to 200, and Microsoft slowly grinds from 310 to 350, and NVIDIA it just stays there. It doesn't die, it doesn't do anything, it just waits for the fundamentals to catch up. What happens then?
Yeah. I'd
And I
argue that
think-
like Microsoft and Apple almost are becoming indexes in themselves.
Yep.
In that, like, you could probably DCA in Microsoft and Apple just as much as you could in like any of the, the SPY, the Qs, or the IWM, until they become the next, too big to fail, and there's like a collapse of some sort. But even if we're talking about like, I don't know, in my small brain that I have, like, I think, okay, if we're really dealing with inflation, and if anything like hyperinflation, like, we're gonna start printing again. There's not a single doubt in my mind that we don't get that printer rolling hardcore again. Like, the stocks that we've seen collapse and get absolutely wrecked, like, how low do you think let's say Microsoft or Apple, like, how low do you think they're gonna get? Like, to your point, like, the worst thing that Apple and Microsoft or any of these big cap names could really do is exactly what you're talking about, is either a slow grind or trading in a range. Like, Microsoft could easily trade in a 250 to 350 range for the next 10 years and be just fine.
Yep.
Next 5 years. Like, I kind of with you. I think that if I were to give anyone advice, which I'm not, because this is financial
This is
advice,
not
right?
financial advice.
Like, you should be in your favorite names in a relatively small position and have cash on the sidelines to either add into the positions if they leg higher, or DCA if they're moving, if we do end up taking another leg lower.
And I don't know what
Just
the aversion is to buying and just setting stops. Like, you could have, let's talk
right.
about NVIDIA for a second, right? Which has been a monster since October. If you had when it broke that
bottom.
when you broke that, yeah, but forget any of that stuff, right? So from an investing perspective, be like, okay, NVIDIA is way overpriced. They cut their revenues by half, and it's never going to do this. But if you were just simple about the conversation, like, well, NVIDIA broke the base lows and then reclaimed them the next week. If I just get long here and set my stop at the base lows minus 50 cents or $1 to see if they come back and break it, then you'd be in the trade and you never would have gotten out.
Yeah.
Right. So you missed out on 100 and what is it, 46%, 47% from the bottoms in NVIDIA because of your macro thesis and stuff like that. And if you're okay with it, that's fine. But I don't understand this day and age of being able to do click and buy, sell, what the aversion is to buying stuff and then just getting stopped out, right? At fundamental bottoms. If you're wrong, you lose 5%, right? I'm not telling you to buy NVIDIA here, but when it was at that level and it reversed the next week, if you had just bought the next week after it reversed and reclaimed, and set the stop at the week low, you'd be in this trade the whole way through. And so what stops you from that? What stops you from that is the question. And that's only something that other people can answer. That's their own mental game, mental fortitude, whatever you want to talk about here. It's just like, what's stopping you from entering these trades besides things being overvalued?
I don't have a good
recency bias. Recency bias. Recency. Well, I can't say it.
Fear.
Yeah, absolutely.
A fear of what? Fear of losing a few percent to maybe even make 20%. So if you're,
I think there's a lot of people that literally think we're on the brink of like
the Great Depression.
Yeah, exactly. I think there's a lot of people in that camp.
So one thing we've talked about in the past, right, is how I believe cycles are happening faster, right?
Yeah.
The time between these events are getting more compressed as opposed to 20, 30 years apart. And I really, with the speed in which the market works, I mean, people, especially people who are traders now, they were around in February and March of 2020, where all of a sudden, like, limit downs were happening on the regular in a morning, right? And I really think that people feel like a flush, from SPY 412 down to SPY 289 could happen in a given session. Like, they wake
Oh,
up.
I know.
And
It's gonna...
it's going to be down 130 points. Like, people really believe that's going to happen. I'm not saying no. I'm not saying this is like, how stupid are they? I'm not, but they really think that can happen, and that there's not a way to get out ahead of that. Like, they just feel like they're going to wake up Monday morning, May 8th, and all of a sudden, well, I don't even know what percentage that is because it's some ungodly number, but yeah, they wake up and everything that they've been in is down 30-some%. That's really the fear. And then the next day it's going to go down to SPY 150 or something ludicrous, right? Like, the next day it's going to be the same 30 to 50%. And if that were to happen, yeah, we would all be in a world full of hurt, but that's just, anything's possible, but we have to be able to regulate what is improbable and what is likely and what is, I just feel like that between the what is most likely scenario versus what is the improbable scenario, we as a culture have become so polarized that it's either moon boys or zero bull or zero bears, right? Like, either we're going to SPY 500 next week or we're going to 150.
Yeah.
But one thing I can guarantee you, Bags, is if any of those moves happen, I can guarantee you every retail platform is going to Robin Hood your ass, right? They're just going to stop working magically and call and talk about the volatility, and you're not going to be able to sell any of the options that you're going to moon on. And you're going to wake up the next day and be like, wait, why are they zero? Because that is literally what's going to happen every time one of the.
And I know you're not arguing with me, but that's really what is keeping people out of the market is their fear of waking up and all of a sudden the major indexes are down 30-40%. And what does that mean for their individual shit stock, right? I'm not going to name any names, but whatever they're in, that they see a volatility of, in a given week, 10% on a bad earnings or whatever. Now that's zero, right? Like, that stock went to zero overnight.
Yeah. And I think the one thing that continue, I was just talking to my wife about it in the drive to, yesterday, is that almost every single company that's cutting jobs right now started prepping for cutting jobs at the end of 2021, right? In the most anticipated recession that was ever coming. So they were appropriately cutting jobs in the moment of where the Fed was saying, we're going to raise rates to the moon, right? And we're going to go to QT and we're going to tighten up monetary policy. Appropriate response from most of these companies, which you would have expected. And they added more job cuts as the Fed continues to say they're data dependent, but they don't. It honestly doesn't sound like they're data dependent right now. It just sounds like, we told you we're going to keep rates higher for longer, so we're just going to do it.
Right.
But that's a different conversation. So what happens
I think it's a credibility issue, right? Like, they're trying to say, well, this is what we told you we were going to do.
But this is the same ones that said they weren't going to cut till 2024 and inflation was transitory. So their credibility was out the door long before they started speaking, because their actions haven't represented a lot of that. I think the one thing that I was like, what happens if you prepared for the worst recession known to humankind that was coming to your doorstep, and then it doesn't happen.
Yeah.
Then they're just going to keep it just stalls, like it just moves it back.
Right? If you're
It's
prepared for something, it's hard. Like we talked about the VIX underperformance all of 2022, right? We had a 40% move down in the Qs in 1 year. Actually, to be honest, it was like 6 months, but we had a 40% move down in the Qs, yet VIX underperformed all year. Why? Because everyone saw the impending doom, and then as you got these gap downs, they were covering their VIX, right? Their puts or whatever you want to call it. And so you couldn't get this proper move down and the underperformance of VIX that continued to happen. And so that's just more indication of stuff going on. And we're getting to the point where a lot more people are getting on the bull ride. So this would be the perfect time to also pull the rug. So I understand that as well. But the question I asked her is, like, every company that started to cut costs in 2021 and all the way through 2022 and even into 2023 in preparation for potential slowdowns everywhere, what happens if that never comes? What if we continue just grinding because things are evolving and they're going to start reinvesting, right? And they're going to start growing again and start pushing. So it's going to be an interesting few years, that's for sure.
Well, this has been a lovely conversation around a lot of different topics. We have like 10 minutes left. One thing we haven't talked about, and we always like to have it in the show, is one thing we like, one thing we don't like. I'm going to go with two things I like this week. I'm going to throw a third one in, an honorable mention. I really like the look of Disney. Earnings this week as well. I think Disney's interesting here. It's been hovering this 90 to 100 level, holding it pretty good. So kind of thinking some Disney. Another name that I don't know why, this is my honorable mention. I don't know why, but PayPal is kind of like so ugly and so tight. It also has earnings this week, earnings tomorrow, actually. I don't know. I might go some degen calls on that, but look how tight that is for weeks.
Yeah.
Something's got to give. I don't know. It could collapse 30% to the downside. I don't fucking know.
I'm in the boat. It's going to collapse, but that's me.
You're well. It shouldn't surprise me. I like Target, and GP's like, don't touch Target. Don't touch Target.
Anyway, how did Target do this week?
I don't know. How did Target do?
Just red.
Yeah, looks like a distribution phase.
Yep. And PayPal looks fairly similar, and I think PayPal
does it. Does it though?
It does. Well, let me say this. There's a lack of accumulation. How about that?
Fair. That was my honorable mention. The other thing I like, and I know this is going to be juxtaposed from my last week saying I didn't like Okta, and I still not crazy about the cybersecurity area. However, I will say that I'm going to throw some love to CrowdStrike.
I did like Crowd. I love Crowd through 140.
Crowd doesn't have earnings. This is one that doesn't have earnings.
Sure.
Coming up this week. But I kind of like it in this area.
Yeah, I like the weekly chart a lot.
Yeah,
actually.
We'll see what it does. So there's my two that I like, and my one honorable mention that GP just poo-pooed on. But anyway, I'll make sure one of his names is the one that I don't like this week.
I think Nick, it's your turn.
I'll put 3 down. I like DXCM, I like AVGO, and I like LRCX.
Dexcom. All right.
Yeah, I think all three of those, I just kind of like how I like the ranges that they're sitting in.
What was the second one? Sorry, you went real fast on me.
Broadcom, AVGO.
Yeah, Broadcom. Yeah, the semis are all right.
And then what did I say? LRCX. I like Lam Research also. I like kind of the
Stimming
range
it
it's
up.
putting in. And then obviously I mean, I like energy on the short side, but on the long side, no, I don't like it too much. So
I love Amazon. I think it's gonna have a very surprising couple of weeks.
Oh yeah.
Yeah.
I think they tried and they failed to kill it, and so false breakdowns usually result in fast moves. So
do you think Google? Oh, sorry.
no,
Do you think Google will follow suit then with?
Nope. I think
No? Okay.
Google is poised to break out in June, end of July, August, somewhere there.
Okay.
I think Google still has some work to do. I think Amazon has done its work, right? And it got sold off of AWS, which was still growing, just not as expected.
Yeah.
And even the sellers were like, no, this is stupid reason we're selling. So you saw the volume be lower, right? So I like Amazon here. One that's kind of caught my eye earlier this week is a random one, but Twilio.
Man, I haven't heard that name in a while. All
Yeah.
right. What do you like about it?
So there's so after the monster volume down, there's been 2 monster volume weeks accumulation, right? And we've been slowly pulling back for weeks on end with very tight ranges on really low volume compared to those.
That'll be Tuesday after hours.
Yes, their earnings is coming up. So this one could be one that surprises, right? So, and I like on the weekly, it reclaimed the 50, I think, as well. Is it? Or something? I can't remember.
Not on the weekly.
No, something, it reclaimed something. But I really don't know why, but I really like this one. It's just in my views of looking at the charts, this one kind of stood out as one of those not expected. No one's really expecting it to do anything, so it's probably going to do something crazy. That was my big trade of the week. I don't play earnings very often, but I had a feeling Shop was going to have one of those crazy weeks, and I bought the Shop 60 calls for 5 cents a piece. And they
That's
did
nice.
really well.
That's a nice trade.
Yeah, they did really well. There were a lot of trades. It wasn't a lot of money, but it was one of those feelings, right? I was just like, Shop's been doing all the right things, but the price hasn't been behaving. There was a bunch of things that kind of worked out for me, but the other one I just lost it that I was looking at that I kind of like is little small crypto miner. On the weekly, on the monthly, on the daily, there's just accumulation all over this chart.
Yeah.
HUT.
Oh,
HUT?
HUT.
Yeah.
Oh.
HUT, I'm gonna add that to the HUT, Mara, and Riot.
Wow, we're talking about a $1.88 stock right now.
Yeah, but it was like a $60 stock at some point. Didn't it hit? No, 16. Sorry.
I mean, Riot and Mara both look.
Look at that monthly accumulation.
Good, very similar.
Look at that. It's just, to me, this chart just looks like it's gonna.
So we like the crypto sphere, boys.
Yes,
I do.
We didn't talk about Bitcoin at all today. I don't think we need to talk about it at all, actually. One name that we have brought up previously that I wanted to get our final take on is old Micron, MU.
Oh, yeah.
After what we thought might be a breakout, it came right back down in. I think
set your alert at 65.
I think that might be a gift.
Yeah.
Yeah, so I love what the Micron chart is doing, but it also trades like complete and utter garbage most of the time. So
Like a commodity.
yeah, I think this is one of those stocks you own but don't trade personally, because
Fair
it
enough.
will just frustrate the hell out of you. You put it into an account that you look at like once a month, set some stops, and call it a day.
Fair enough. I'm going to buy some PayPal and some Disney and some Twilio, and we'll see how I come out at the end of the week. How about that?
Yeah, that should be interesting. This is not financial advice.
No, that's what I'm doing personally with my own money. You guys
Yeah.
do what the hell you want to do. That's what I'm doing.
Yeah,
Not financial advice. This is Bags' own fortune.
you know the other one that I really like that
Netflix.
I love Tesla.
It was a 50-50 shot. It was either Tesla.
I think this, to me personally, is setting up for a monster run here. My personal opinion, I think this is probably going to be above 300 by the end of the year, if not before that. My personal opinion.
I agree. I think it is a basketball underwater.
Yeah, and that this 3-candle pattern the last 3 weeks looks really similar to how it bottomed in early January here as well. And you had a low volume pullback for almost 2 months, right into the 50% retrace of that move from the bottom. This as long as it doesn't break down below last week's candle, last week's low, sorry. I think this is set up for a big move. And if you think in terms of catalyst, what's the catalyst that comes by the end of the year? And guess what that catalyst is going to be? Everyone's been anticipating it. It's the Cybertruck, right? So I think this starts to behave a lot better over the next couple of weeks.
All right. Tesla's the four-banger for GP there.
I think you're fine to wait. Let's just say you want to trade it. I think you could wait until it clears 200 and still be good.
Or
And
just
not
being
even a longer.
or just being long dated calls. They've destroyed a lot of IV in Tesla because it has been doing nothing for a couple months now.
Yeah.
So you actually get to buy longer dated calls without having to pay massive premiums like you usually have to do. So like
Sure.
maybe September or January if you're looking, and I wouldn't go too far out of the money personally, but if you're an options trader, I think that's kind of how you kind of take full advantage of the potential here. And if it breaks this week's candle low, get out.
Yeah.
Really that simple.
Yeah, for sure.
And usually those premiums of the longer dated calls don't come down that much. So that's your bigger advantage, right? Because the implied volatility stays pretty high in Tesla itself.
All right, gents, we're at time. Thank you yet again.
All right.
You're both gentlemen and scholars, and I appreciate you. I appreciate everybody who tuned in tonight. Thanks for joining. Don't forget to mash that like and subscribe button. We appreciate that when you can do that for us. And we'll be back next week. Thanks, everyone.
Next week is Mother's Day.
Oh, good call.
So I'd be down to do a different day. I can't do Saturday. I'm at a skate competition with Howie, but
I can do Friday. Sunday, I'm flying to Mexico City on Saturday.